Global markets may be on the verge of a major showdown in the coming days. Japan's recent reduction in its holdings of United States Treasury bonds is triggering new concerns in Washington. The escalating trade war, especially regarding electric vehicles, and new U.S. tariffs on the Japanese auto industry are prompting Tokyo to respond in different ways. Donald Trump seems to know what he's doing, because one analyst commented, "For the second day in a row, the Dow Jones has dropped. Take a look at this. Clearly, the Dow is way down." Subscribe to Baby Eagle and turn on the notification bell so you won't miss the latest updates on world events from us. Japan signals diversification from U.S. bonds. Given the economic balance, it is in our national interest to diversify our investments, the Japanese Finance Ministry said in a statement on March 1, 2025. The markets interpreted this as a signal that Japan may be exiting U.S. Treasury bonds. Washington reacted strongly. The U.S. Treasury Secretary emphasized the importance of trust between allied countries and sent a message to Japan to avoid taking steps that could damage the dollar-based system. But could this move really shake the U.S. economy, or is Japan simply trying to increase its bargaining power? How will the strained relations over EV tariffs affect the global economy? Let's take an in-depth look behind the scenes of Japan's critical move on the dollar and its implications for the global financial system. The background: Japan's role as a major bondholder. Japan has long been one of the largest foreign buyers of U.S. Treasury bonds. Over the years, Tokyo has accumulated hundreds of billions of dollars in U.S. government securities, becoming a major financier of American public debt. Recently, however, there's been growing discussion about a Japanese strategy to weaken the dollar. Behind this is a consistent policy of foreign exchange interventions aimed at keeping the yen competitive. The Bank of Japan has traditionally sought to control the value of its currency. Until now, these interventions were limited to avoid provoking backlash from the U.S., but Washington's high tariffs on electric vehicles and accusations that Japanese EVs pose unfair competition in the U.S. market may have pushed Tokyo to take a different approach. A message appears to have been sent behind closed doors. If the United States continues its protectionist measures, we may review the bonds we hold. Washington's reaction: a cautionary warning. In response to these developments, the U.S. Treasury Secretary gave a short public statement. Trust between allies is essential. Interdependence makes sudden moves by one side risky. This was clearly directed at Japan, though no names were mentioned. Washington, of course, is unhappy with Tokyo's strong reaction. Japan is one of the few economies with enough influence to challenge the global prestige of the U.S. dollar. That's why headlines in the U.S. press have started reading, "Japan is pulling the dollar's mortgage." Electric vehicles, a strategic global industry. The fact that electric vehicles are at the center of this debate once again shows how strategic this sector has become. Japan is one of the world's leaders in hybrid and fully electric vehicle technologies. Giant companies like Toyota, Nissan, and Honda are not only active in the U.S. market but also dominate in Europe and Asia. Meanwhile, the U.S. government is trying to boost EV production domestically. It has chosen to impose protective tariffs against Japan's highly competitive EV products. These tariffs have not only angered Japanese manufacturers, but also raised a pressing question in Tokyo. Why should we shoulder the financial burden of the United States? Japan's finance minister delivers a strong message. Japan's finance minister sent a clear message to Washington. If economic interests are clouded by unilateral sanctions, other instruments will come into play. Another major topic being debated is whether Japan would actually make a profit from selling its U.S. Treasury bonds. According to many economists, such a move carries risks, for Japan too. A large-scale bond sale could cause instability in financial markets and drive up the value of the yen, potentially harming Japan's export competitiveness. U.S. policies mirror Trump-era protectionism. In the post-Biden era, U.S. trade policy has increasingly mirrored the protectionist school of thought championed by Donald Trump. Rising tariffs are used as a shield to protect U.S. manufacturers. Meanwhile, global warming and environmental concerns are raising the stakes for EV production. Washington wants domestic companies to play a major role in the green economy. However, the advanced technology and global experience of Japanese automakers are frustrating American producers. This is why tariffs and quotas are being used as tools to restrict or close markets. Japan, in turn, may be responding by saying, "Since you're using tough tactics, we will use our financial power, Treasury bonds." How much damage could Japan's move do to the dollar? According to financial circles, Japan still holds hundreds of billions of dollars in U.S. Treasury bonds. If even a small percentage of these bonds were sold, it would cause significant market shock and spark speculation about the dollar's role as the world's reserve currency. In a closed-door meeting, the governor of the Bank of Japan reportedly said, "Our policy is not aimed at unilateral reserve drainage, but we will not leave ourselves weak in trade disputes." Some commentators believe this step is purely tactical, to gain bargaining power. Others suggest Japan is waiting for the U.S. to remove or relax its EV tariffs. Regional reactions. Asia watches closely. Asian powers such as China and South Korea are watching these developments with great interest. Chinese media have commented, "Japan is being unusually brave in standing up to the dollar." Some experts are already debating whether Japan's actions could open a new economic front in Asia. Many believe that Washington will try to find ways to appease Japan, as it cannot afford to alienate strategic allies in the Far East. However, domestic political pressures and lobbying from American businesses make it unlikely that the U.S. will ease up on Japan. The belief is, limiting foreign competition is essential to protect U.S. industry, and any concession would be a major loss of face. Technical and financial aspects of U.S.-Japan. Economic relations, Japan's currency, the yen, has suffered significant depreciation against the U.S. dollar in recent years. In particular, Japan's low interest rate policies and aggressive foreign exchange interventions have weakened the yen, driving up the USD/JPY exchange rate. While the Bank of Japan has traditionally tried to control the value of the yen, those interventions were kept within limits to avoid provoking a U.S. reaction. However, high U.S. tariffs on electric vehicles and accusations from Washington that Japanese EVs are distorting the market may have led Tokyo to revise its strategy. Over the past 5 years, the U.S. dollar has gained around 15% against the yen. The exchange rate dropped from 100 yen =93 cents in 2020 to 100 yen =85 cents in 2025. Especially during the last quarter of 2023, the surge in the dollar's value posed a threat to Japan's economic balance. A weaker yen means more expensive imports, which intensified inflationary pressures inside Japan. Impact of U.S. interest rates on Japan's investment strategy. U.S. interest rates, particularly those on 10-year Treasury bonds, have become a key factor influencing Japan's foreign investment decisions. As U.S. bond yields rose to 4.3% in late 2023, Japan had to reassess its bond purchases and reserve management. Although Japan is a major investor in U.S. bonds, the increase in yields has reduced the real returns on these investments, forcing Japan to rethink its economic and financial strategy. Some analysts believe a continued rise in U.S. interest rates could lead to Japan cutting back even more on its foreign investments. At the same time, lower demand for U.S. bonds globally could reduce liquidity and strain Japan's foreign exchange reserves. Beyond economics, the geopolitical dimension. Japan has long maintained a strong partnership with the United States on defense and security matters. But could this economic tension, centered on EVs and tariffs threaten their strategic alliance. Some observers think it's unlikely. Still, it's worth noting that prolonged trade disputes can have a chilling effect on broader diplomatic and military cooperation. A spokesperson for the U.S. Department of Commerce said, "Trade disputes between allies can be resolved through dialogue and mutual understanding. We are examining the background to Japan's financial moves." This statement shows Washington is taking the situation seriously, but is deliberately avoiding strong rhetoric. That's because an ongoing Japanese sell-off of Treasury bonds could disrupt the dollar's stability in global markets and ripple back to hurt the U.S. economy from the inside. The EV technology race and U.S. policy responses. Japan's automakers have invested heavily in next-generation EV models to expand their presence in the U.S. market. Toyota is working on hydrogen-powered vehicles. Nissan has developed a fully electric range. Honda has made major advancements in battery technologies. Given this, it's not surprising that the U.S. government is seeking to protect its domestic automakers through financial incentives and restrictive trade policies. But Japan claims that these actions are unfairly blocking its advanced technology, thus distorting global competition. Meanwhile, American automakers argue, we face similar barriers in the Japanese market, which is also protectionist. In short, the trade conflict is built on mutual accusations from both sides. Some believe Japan is using the Treasury bond issue to gain more favorable trade terms. Others argue that the threat to the dollar is Japan's ultimate bargaining chip. If this tactic works, the U.S. might lift some EV tariffs, and the two countries could begin negotiating a new free trade agreement. But will it be that easy? Experts aren't optimistic. Tokyo appears to be trying to carve out a more independent economic course for the long term. Its goals include reducing reliance on the dollar, boosting its leadership in Asia, and defending itself against U.S. protectionism. At a closed-door meeting with top Japanese business leaders, the main topic was global leadership in the electric vehicle sector. According to leaked information from that meeting, the president of the Japanese Automobile Manufacturers Association said, "We need our government to support us to overcome the U.S. customs walls." The government's response was clear. Alongside our trade strategies, we are determined to leverage our power in the global financial system. This exchange shows that Japan's industrial and government policies are working hand in hand. U.S. politicians respond with harsh words. In a joint press release, several U.S. senators declared, "Japan is acting more like a rival power than a friendly ally. This approach poses a direct threat to our economic security." These words show that rhetoric between the two countries has become significantly more aggressive. At the same time, commentary in the Japanese press highlights a different viewpoint. The United States will eventually have to compromise. The dollar-based system is hanging by a thread, and Washington won't want to risk breaking it. Of course, if the conflict continues, global economic stability could also be threatened. The U.S., one of the world's most indebted countries, relies heavily on buyers like Japan to finance its budget. If Japan walks away, Washington may have to offer higher interest rates to attract new buyers, which could fuel inflation and increase the risk of recession. Two fragile yet interdependent economies. Japan's own economy is strong but vulnerable. The EV-related conflict is unlikely to end anytime soon. The U.S. government seems determined to incentivize domestic auto manufacturers and limit foreign competition. Japan, in contrast, is adopting a more aggressive diplomatic approach, saying, "We do not intend to lose our global leadership in innovation to U.S. protectionism." That's why the Treasury bond card has now come into play, reminding everyone how deeply interdependent these two giant economies are. Now, all eyes are on one question. How much of its massive U.S. bond portfolio will Japan actually sell, and how will the U.S. respond? Some experts believe Japan has already tested the waters by selling a small batch, worth around $10 billion. This might be a signal for a larger move to come. If Washington refuses to relax its EV tariffs, Japan could sell off far more bonds. the global implications of a Japanese bond sell-off. In such a scenario, it's hard to predict what would happen to the dollar's value or to U.S. borrowing costs. Some argue that the move could backfire on Japan. If it sells its bonds too quickly and the dollar depreciates, Japanese exporters, who rely on the U.S. market, could see reduced revenue. But given the ongoing EV tensions, Japan may already feel like it's losing ground in the U.S. market. Their logic is becoming clearer. If this market is closing to us, we'll use our financial weapon. According to global analysts, this U.S.-Japan bond conflict could be the beginning of a new chapter in the world economy. More countries may follow in Japan's footsteps. Russia has been distancing itself from the dollar for years. China has also periodically reduced its U.S. bond holdings. Now that Japan has taken a bold step, it may reignite the global debate. Is the dollar's dominance starting to crumble? A new economic order? Electric vehicles and trade tariffs may play a central role in this transformation, not just between the U.S. and Japan, but globally. Europe and China are likely to be drawn into the equation. China is both a major U.S. bondholder and home to the world's largest EV market. If Japan's strategy proves effective, other Asian nations, including China and South Korea, may feel emboldened to play the bond card against the U.S. as well. Given the risks, many believe the U.S. will try to reach a compromise with Japan before things escalate further. What about Europe? Where does Europe stand in this global power play? The European Union is just as competitive as Japan in EV technologies and is similarly uncomfortable with U.S. protectionism. However, European countries don't have the same financial leverage as Japan. They don't hold as many U.S. Treasury bonds and are focusing more on persuading Washington through diplomacy. If Japan's strategy works, the EU may reconsider its approach, possibly reshaping the future of U.S.-EU trade relations. Ripple effects on developing economies. A weakening U.S. dollar would also impact developing countries. Currencies such as the Turkish lira, Brazilian real, and Indian rupee could become even more volatile if dollar fluctuations increase. So far, markets have remained relatively stable, indicating that Japan is managing its bond sales cautiously and gradually. Will these developments push the U.S.-Japan trade war into a financial dimension? Or is Tokyo merely strengthening its negotiating position? All eyes are now on the next move. Let us know what you think. Thank you for following us.